A warm welcome to Energy Frontiers this week. I am Justina Okechukwu. This program has been brought to you with the support of the African Energy Chamber. We begin with some of the biggest energy news on the African continent and around the world. Algerian state-owned oil company Sonatrach has awarded a $1.1 billion petrochemical contract to Tecnimont, a subsidiary of Italian engineering group Marie, for a new linear alkyl benzene plant in the industrial zone of eastern Algeria. In Zimbabwe, Invictus Energy has signed up Mangwana Capital, a private equity firm, to lead negotiations with Zimbabwean institutional funds that have shown strong interest in investing in the gas projects. BW Energy have started production from the Hibiscus South field located on the Dussafu license offshore Gabon. Coming just 5 months after its discovery, the field is expected to produce around 5,000 to 6,000 barrels per day initially and recover 6.6 million barrels from around 22 million barrels of oil in place. The Gas Exporting Countries Forum has launched the latest edition of its annual flagship publication, the Global Gas Outlook. The report provides insights and projections of long-term trends of the global energy system, focusing on natural gas demand and supply until the middle of the century. The International Energy Agency has raised its estimate of 2024 oil demand growth by 110,000 barrels per day to 1.3 million barrels per day, but says the pace of expansion is on track to slow from the 2023 levels of 2.3 million barrels per day. The Paris-based organization also said higher oil demand expectations and fresh production cuts from the OPEC Plus alliance could push the 2024 crude market balance from a surplus to a slight deficit if the voluntary reductions remain in place for the rest of the year. The IEA's projection was, however, substantially below forecast by the Organization of Petroleum Exporting Countries. The group maintained its oil outlook at 2.2 million barrels per day, but slightly lowered supply forecast for 2024 to 1.1 million barrels per day. And a summary of your energy news headlines. Next on Energy Frontiers, we get expert insights into the global oil market in the week. Stay with us. Welcome back. Now, the global oil market saw some significant shifts this week after Ukrainian drones hit Rosneft and Lukoil refineries in Russia, raising concerns about potential supply disruptions. But that's not all. OPEC's forecast of a 2.2 million barrels per day production hints at a continued thirst for oil globally, despite growing focus on renewable energy sources and contradicting predictions from the International Energy Agency. So I turn to Julian Mathonia, oil markets economist at Energy Intelligence, to walk me through the latest data and developments and what to expect in the near to medium term. So do you see any key lever to higher global oil demand in near to medium term, even as OPEC retained its 2024 and 2025 demand forecasts?
Well, it's a very good question. I think traders, from what we've heard recently, there was an International Energy Week in London a couple of weeks ago. I think that traders trust that OPEC Plus market management will maintain a price floor, in case demand drops lower than expected, especially now that the post-pandemic rebound is over. So if you've seen the recent news, I think yesterday or the day before yesterday, Jamie Dimon, the CEO of JP Morgan, the world's largest bank, basically said that the global economy is not yet out of the woods and that a technical recession is still possible in the US. So to make a long story short, the main demand lever would be a fast decline in core inflation. Core inflation levels globally, not just the US, but the other countries as well. That would be a good lever. I think the second best demand lever would be China. China has an $18 trillion economy where manufacturing has been declining for 5 months in a row. And I think export fell for the first time since 2016 last year. So, when you talk to financial market, what they tell you is that they want to see a big stimulus package in China. This is not happening at the moment, but if we've got a big stimulus package in China, then, this is the only thing that will convince market that China can still grow as fast as in the previous years.
But there are other people who say that China is actually growing and we should ignore the headlines. And hopefully we would see much package coming from there. But Nigeria's oil production was down at 1.32 million barrels per day in February. What do you make of other African top producers such as Angola?
Well, West African producers have been a core focus of headlines recently. Nigeria, Angola. Angola produced just above 1 million barrels per day in February. And, the country's oil output has been declining since, I think, 2008, when output at this time was nearly 2 million barrels per day. Hopes of reversing the trend have been dashed, I think, by a lack of sizable new discoveries. New oil discoveries. And I think since Angola has tried to maximize oil production and revenue, but it has been consistently underproduced. So if you take Angola and you mentioned Nigeria, if you take Angola and Nigeria together, they produced about 300,000 barrels below their quota last year on average. So they've been consistently underproducing. So, Angola has been a regular laggard in terms of compliance with production quotas from OPEC. I think the important message here for OPEC is that disputes over production baselines with West African producers highlight that divisions between, chronic underperformers like Angola and the group's more capable producers, say like some Gulf country, are a potential risk for OPEC cohesion and OPEC, sticking as a group together in 2024.
Now, you mentioned something very significant earlier, and you said what's not to like about $80 per barrel. Now, Saudi Arabia wants oil prices around $90 per barrel to balance its fiscal position. What would this mean for smaller producers? Now, let me just mention something quickly. Higher oil prices, if I look at it like as a layman, would mean more expenses, right? So what would this mean for other smaller oil producers?
Well, one thing is that I'm not entirely sure that Saudi Arabia really wants a specific price. I know we had this discussion with the Saudis. They don't like to hear that. So you might be right about the price, the $90 per barrels, but we actually estimate that the country trade break even. So, the level they need to balance their import exports and keep their trade balance to zero is about $75, was about $75 in 2023. And it's a bit lower in 2024. We estimate between $72 and $73 per barrel. So again, and back to what you said, what's not to like with $80 per barrel? It's a price that works well for most producers, including Saudi Arabia, of course, and for consumers in the sense that it remains well below the psychological $100 per barrel, which is the level where, the market starts to panic a little bit. And what it means for overproducers, including smaller ones, is that if they sit sort of higher on the cost curve, they can still produce and be profitable at this price level. But I would say, don't take your eyes off the ball. The future is to low-cost producers like Saudi Arabia and those who can extract a barrel of oil for less than $25 per barrel. So outside of the Gulf countries, it means a few fields in Norway, maybe like Johan Sverdrup, for example, and the most efficient US shale producers that have increased the depths of their reserves, like Exxon after acquiring Pioneer or Chevron after acquiring Hess. And that's it. So the future is to low-cost producers.
And when we return our spotlight on carbon trading and its role in Africa's low-carbon future. More on this in a moment.
We are done dreaming of an industrialized Africa. No more enduring long journeys in darkness. No more imagining life without constant power. We are done. We are done. Done tolerating 24 hours without power, load shedding, blackouts, and power cuts. Enough. Imagine a life where our abundant natural resources can't power a generation. We can't cope with that reality. 600 million Africans still lack access to power. We have the solution. It's time to turn imagination into action. African Energy Week 2024 is the platform to implement change, sign deals, and take decisive action. And implement. Join us. Invest in African energies. Energy growth through an enabling environment, and be part of the movement that brings hope to millions across the continent. It's not just about power, it's about empowering lives and giving African hope. Be there to witness the transformation. African Energy Week 2024, where imagination becomes reality. Secure your seat now. Don't miss out on African Energy Week 2024. Visit our website and buy your tickets today. Let's light up Africa and create a brighter future together.
Project. At the time you need to build that project. Sign, baby, sign.
Welcome back to Energy Frontiers. Africa has the potential to be a future player in the global carbon market, but the continent currently faces challenges such as lack of infrastructure, limited monitoring systems, underdeveloped regulations, and financial constraints. However, pilot projects and growing international recognition suggest a future where Africa can actively participate. Cindy Oraro is an energy expert and a partner at Oraro and Company Advocates, and she tells me how countries like Kenya, South Africa, and Ghana are taking advantage of the new developments in the global carbon markets. How is Oraro Group helping companies and businesses, governments to navigate the legal landscape for climate change policies in Africa?
Well, we've been privileged to be very active in the legal advisory space, as well as aiding governmental institutions in crafting and developing the regulatory frameworks that will govern energy transition, as well as carbon credit regulations. So in terms of legal advice and aiding clients in regulatory compliance, we first of all start with the due diligence process. That's something that we're very active in, where clients now want to know whether they are investing in businesses that are sustainability driven and that are compliant with sustainability regulation or ESG regulation. Another key factor is in the way we structure transactions and projects. Again, sustainability and green initiatives are key in terms of establishing ESG into project development. And then there's the aspect of just regulatory compliance. In Kenya and in other African countries, we see the development of these new regulations and legislative initiatives that require a complex roadmap towards compliance. Luckily, with the transition period, we are able to guide clients to navigate those complexities. In essence, we are involved across the value chain of transactions, as well as in the development of regulatory frameworks. And it's been an exciting journey.
Indeed. So give me a sense of what is delaying the adoption of carbon capture and storage in Africa, because I know that at the moment it's not very prevalent in Africa, but what's the delay about?
Well, to start off with, carbon capture facilities or technologies are very expensive. And the cost of establishing those projects in Africa does not, in many instances, have the same return on investment as, say, in the West. Another thing is that carbon capture and storage facilities are very controversial, simply because many of them require, significant amounts of land for the facility itself, as well as for the storage. And as you know, the storage requires constant monitoring to ensure that there are no leaks into the environment. And this monitoring can take years, costing, again, a lot of money. So there's a question of the rights of communities, particularly over community land. Do they stand to benefit from these carbon capture projects? I say that noting that land is a very emotive thing on the African continent. And that brings us to the last point on this, which is that, when you're dealing with carbon capture and storage projects, there's always a question of what is the alternative, and is the alternative better? It's argued in some instances that forestry projects have a better return on investment and are more effective at capturing greenhouse gases than, say, carbon capture technologies. That said, it's clear that these technologies play a crucial role in the climate change agenda. And particularly if you're dealing with, say, the manufacturing industry, they will forever, at least when we're talking about climate change initiatives and greenhouse gas reduction, they will be part of the conversation. So here in Kenya, we are seeing a lot of interest in these technologies, and with the amount of visibility and interest shown, we expect Kenya to become a hub in carbon capture and storage technologies and facilities.
Registrations are ongoing for the 2024 leg of the African Energy Week under the theme, Invest in African Energies, Energy Growth through an Enabling Environment. The African Energy Week will feature an extensive lineup of high-level panels, keynote presentations from industry experts and leaders, including engaging workshops, exhibitions, and networking events from November 4 to 8 at City ICC in Cape Town, South Africa. Please visit the event website on www.aecweek.com for more information. And finally on the show, the African Energy Chamber proudly received the African ESG of the Year Award at the Africa Energy Technology Conference that took place this week in Accra, Ghana. The award was in recognition of the Chamber's dedication to sustainability and ethical practices towards the creation of a brighter future for Africa's energy industry. The award was received by the AEC's Executive Chairman, NJ Ayuk, who underscored the steadfast advocacy for a just transition in Africa and defense of the continent's right to an industrialized future. From all of us here at Frontier Africa Reports, we say a big congratulations to the team at the African Energy Chamber. And that's how we wrap up this package of Energy Frontiers, and we thank you all for watching. Be sure to follow the program on Frontier Africa Reports website, like this video, subscribe to our YouTube, and follow us across all our social media handles as indicated on the screen. I am Justina Okechukwu. I'll see you again soon.